live at TFNN. Breakout Investing with your host, Ken Shreve.
Good afternoon, friends. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Breakout Investing now 5 days a week on TFNN. I did my first full schedule last week, so happy about that. David White, who used to be in this 3 o'clock to 4 o'clock hour. He's going 2 to 3 now for the rest of this month on Monday, Wednesday, and Friday, and then he'll be picking up 5 days a week starting at the beginning of August, 2 to 3 Eastern for David White's show, and then Breakout Investing, my own show, 3 to 4 Eastern every day now on TFNN. 877-927-6648. 877-927-6648. Give me a call. Let me know what you think about this market. Are we headed higher from here? Or is second quarter earnings season going to bring more sellers out into this market? Kind of 50-50 at this point. I wish I had a better read on the market for you. Seeing some stocks acting pretty well, seeing some decent technical setups out there. So the market, is forcing me to take some long positions here, but doing it with trepidation. It just strikes me still as a trader's type of market where, you buy a stock, you get a few points in a few days' time, you're best off just taking that money off the table. And what we've seen in recent weeks is that those gains can disappear pretty quickly. So if we were in the meaningful stages of a new uptrend here, it was clear to me that new money is coming in from the sidelines, which that is clearly not the case at this point. But if it were, it would be less of a trading market. There would be a better foundation among growth names that I'm following. But still, let's try to be positive here, and we'll talk about some stocks that are holding up quite nicely, some stocks that are outperforming, and some stocks that I also think have pretty darn good potential here. Seeing just as much in the way of technical breakdowns, unfortunately. So mixed action overall in my growth screens, but not going to give up on this uptrend yet. It is a market uptrend that is under pressure due to recent higher volume declines in the major averages. Headed into today, in recent days, over the past few weeks, we've seen 3 higher volume declines in the NASDAQ composite and 2 for the S&P 500. Right now, we could even see another higher volume decline taking shape in the NASDAQ composite today. Volume is tracking higher than what we saw on Friday. For the NASDAQ, that is. NASDAQ volume on Friday, super light at just over 1.3 billion shares. So even if we do get a higher volume decline today, 1.4, 1.5 billion shares, still, it's not really doesn't feel like institutional selling. And again, seeing some decent action out there today, despite mild losses for the NASDAQ. Volume on the New York Stock Exchange tracking a little bit lighter than what we saw on Friday. NYSE volume on Friday was 675 million shares, so we're tracking a little bit lighter than that with about 50 minutes left to go in Monday's session. Let's refresh the NASDAQ composite chart here. Don't forget, folks, Tiger TV is where you can look at charts right along with me. Tiger TV is found right on the homepage of TFNN.com. The show Breakout Investing is carried live Monday through Friday on Channel 1 from 3 to 4 Eastern. And if you can't listen to the show live, the show is archived on Channel 13, and you can also get Breakout Investing as a podcast on iTunes. And also, if you want to listen to TFNN programming on your smartphone, just type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. All right, NASDAQ composite right now down about 8.5 points, 0.3%, fairly mild selling in the tech index so far. It is trading right around 2,900. Let's call it 2,900 for the NASDAQ composite, still holding above its 50-day moving average at 2875. Trading almost in the top half of its trading range, so fairly quiet, uneventful day. Not too bad considering the scope of the gains that we saw in the tech index on Friday. Interestingly enough, the NASDAQ composite underperformed a little bit on Friday. It was up 1.5%, very soft volume, not a convincing move at all. but it did manage to climb above its 50-day moving average on Friday. That's compelling. The Dow and the S&P 500 actually outperformed a little bit on Friday. Both indices were up 1.6%. Volume very light on the New York Stock Exchange as well on Friday. So that's a look at the NASDAQ composite, again, down about 8.5 points to 2,900. And the S&P 500, see where that is at right now. It is mostly unchanged, down 2 points to 1348, trading up in the top half of its trading range. So indices really today, encouraging that they're holding on to the majority of the big gains that we saw Friday. That is compelling. So mild losses so far for the S&P 500 and NASDAQ. Wouldn't even be surprised to see the market try to turn green here by the end of the day. We will see how that shapes up, and I'll keep you posted as it's happening. Again, distribution, higher volume declines, well contained up to this point. I mean, they are out there. It is what I would call yellow flags in the market. We obviously had a big sign of strength in the S&P 500 back on June 29th, huge percentage gain, and then last week, boy, stocks really rolled over. It forced me to take some profits, take some money off the table in the Ultimate Growth Stocks model portfolio. That's a newsletter I write at TFNN, and if you want to check out 30 days free of my weekly newsletter. I'll be doing my next update tomorrow morning. I update weekly on Tuesday, and then I send out email buy and sell alerts, market updates in between, keeping people abreast of what's going on in the market. So if you want to try 30 days free of Ultimate Growth Stocks, just go to kenshreve.com. That takes you over to my TFNN information page, and you can click the green banner, Ultimate Growth Stocks green banner, and you can try out the newsletter for 30 days. Free. And I still have a fairly stealth cash position. I have two names, added another name today for the Ultimate Growth Stocks model portfolio. So I own two high-quality stocks right now, and definitely will be looking to add more. Tough market environment here to be aggressive with new buys. Any buying that I do in coming days can be very conservative, small positions to start, knowing that it is still a very mixed environment, not an easy environment for growth stocks to make headway, and that is important to keep in mind. Markets down a little bit despite weakness in the dollar. U.S. dollar index recently trading around 83.05, down about 30 ticks. Almost 0.4%. Let's check in on the UUP. I actually have a ETF here of the Deutsche Bank U.S. dollar index bullish fund. Its chart looks identical to the U.S. dollar index. It's down for 2 days in a row here, still holding above its 50-day moving average at 2273. The UUP is comprised of several long U.S. dollar contracts, and right now it's down 7 cents, about 0.3% to 2286. So support levels watching right now for the UUP would be the 20-day moving average at 2273, 50-day moving average at 2264. So U.S. dollar index under pressure for 2 days in a row now. Crude oil today up $1.33, 1.5% to 88.43 a barrel, and gold for August delivery didn't do much today, lost just 40 cents to finish at $1,591.60 an ounce. Let's check in on shares of Citigroup today. Really busy week of corporate earnings, and it's going to get even busier next week and the following week. But let's check in on Citigroup today. After hitting an intraday high of 27.53, the stock is now trading around 26.78, near its session low. See how it tries to go up against its 50-day moving average here, gets turned away. Now trading near a session low, only up 13 cents now to 26.78. So Citigroup still a broken stock here. The results again came out before the open. Earnings down 11% to 95 cents a share. Sales also down 11% to just over $24 billion. Money set aside for loan losses, loan provisions in the quarter, $27.6 billion, down from $34.4 billion. So that's good news. Typical what we're hearing from most banks these days, provisions for loan losses on the decline. That's a good thing. And investment banking revenue at Citigroup fell 21% from a year ago to $830 $54 million. After the close, let's check in on a strong price performer, insurance company Brown & Brown. Right now under a little bit of selling pressure here, down 48 cents, 1.8% to $26.81. Brown & Brown has been a solid performer in the insurance space. Earnings here expected to be up 19% to 31 cents a share. Sales also up 19% to $294.4 million. So after the close, look for results from Brown & Brown. And another strong price performer will be out after the close. Take a look at J.B. Hunt Transport Services. The stock also holding above its 50-day moving average. J.B. Hunt right now down 52 cents, 0.9% to 58.57. Its 50-day line is just below $57 a share here. So expecting good growth at J.B. Hunt Transport Services. Earnings up 26% to 57 cents a share, with sales up 13% to $1.3 billion. Some story stocks today. Let's check in on HGSI, Human Genome Sciences. It finally agreed to be acquired by GlaxoSmithKline, GSK, for $14.25 a share. This has been a deal in the works for some time, but Human Genome wanted the deal sweetened a bit. GlaxoSmithKline did it. Both these companies have been longtime partners, so deal finally gets consummated. Human Genome up 4.5% today to $14.19. Again, the deal values HGSI at $14.25 a share. So let's see. Heavy volume movers in the market, really not much, but news late Friday, of course, Visa and MasterCard. Let's check in on shares of Visa here. Visa gaps up, hit an intraday high of 131, but boy, the buying demand really a little bit suspect here. Still having a good day, up 2.5% to 127.27, but you can see Visa's trading in the bottom half of its trading range. But the news here for both Visa and MasterCard, the two payment processors, as well as major banks, agreed to pay at least $6 billion to settle a suit that alleged these companies conspired to fix the fees that retailers must pay them whenever customers swipe their credit card. So that $6 billion figure, many feared it was going to be much more than that. So Visa, benefiting on the news today. Nice little technical breakout, heavy volume, but frankly disappointing for longs that the stock is trading near the bottom half of its trading range today. Let's check in on shares of MasterCard as well. Same type of chart. Early strength has faded. Shares of MasterCard now up 1.9% to $437.88 after hitting an intraday high of $448. So Master and Visa Card having a little bit of trouble getting going on positive news. And why don't we check in on Dow Component American Express as we head into the break. It's trading up near its session high. Technically not looking too bad here. Cup with handle base forming for American Express. Shares up 90 cents, 1.5% to $58.83. All right, folks, Breakout Investing on TFNN. Ken Shreve. We will be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Breakout Investing now 5 days a week on TFNN from 3 to 4 Eastern. 877-927-6648. That's the number to use to get through. And we're talking about strength in Visa and MasterCard before we went into the last break. And then right at the end, I pulled up a chart of American Express. I want to talk a little bit more about American Express, not so much as a company and fundamentals and all these things, but really just its technical setup here, because it has the type of technical structure that I'm really looking at right now in this market. We have an uptrend that is intact, but is under quite a bit of pressure here. It still could work, though. It's too early to give up and turn bearish and go short the market. Remember, market was acting so poorly last week, Monday, Tuesday, Wednesday, Friday, Thursday, and then boom, just when things it seems like they're at their worst, you get a 1.5% move for the Nasdaq, 1.6% move for the Dow and S&P 500, and then all of a sudden the short positions don't look so hot. But going to try to give this market uptrend a little while longer to work here. But American Express is really what is one of these bullish cup with handle chart patterns. 10, 12 years I spent at Investors Business Daily. This is a pattern that Bill O'Neill over at IBD looks at a lot, and the handle area for American Express isn't perfect. It's a little choppy. It's got some volume in there, but it is a stock. If this market gets going again, wouldn't be surprised at all to see American Express take out the $60 price level. And if new money comes in from the sidelines, institutional buying, they could, institutional money could find its way into American Express. Still too early here. Stock is outperforming nicely today, but would rather wait to see if this can take out the $60 price level in heavy volume. Fertilizer stocks continue to act very, very well here. Let's take a look at a recent new issue, a name that we've talked about on the show in the past, Rentech Nitrogen Partners. This is a recent new issue. Not that long ago, the company came public. It was back in November of last year. Came public at $20 a share, trading at $30.14 right now, up close to 4% on the day. Nice little breakout here from a cup with handle pattern. Rentech Nitrogen breakout here over the swing point of $29.49. But I'm a little cautious on this company. First of all, Rentech, they make natural gas-based nitrogen fertilizer, other industrial products for agricultural uses. The daily chart doesn't look too bad here. You've got a breakout from, again, a cup with handle pattern. Here's the handle area that formed. But let's take a look at the weekly chart. Do I have it here? I don't have the weekly, but you know what? I'll flip over to a weekly right here. Moving averages are going to be a little bit astray, but what concerns me here is that you have 6 straight up weeks for Rentech Nitrogen. So even though the stock is acting well today, there's good volume in the stock today. There are signs that institutions are in there buying, and it is a good heavy volume breakout. But I switch over, take a look at the weekly chart here. 6 straight up days. I kind of feel like we're chasing it here. So I'm going to hold off and instead wait and see if this thing forms a little handle area from this $30 area. After 6 straight up weeks, it's possible that this could try to come in a little bit. If it does, then you'd have a little handle area forming, and then you'd probably get a better entry point here. So good day for Rentech Nitrogen Partners. Weekly chart, I don't like buying a stock after 6 straight weekly price gains. So that's the bottom line there. Now, let's take a look at Agrium. This is another fertilizer stock. AGU is the ticker symbol here. This is a little more interesting setup here. It has made a big move, but it pulled back, formed another handle area here. Watching Agrium for a breakout over 92.74. Stock right now is up 2% to 91.76, so it's still about a buck below the swing point. Let's take a look at the weekly chart for Agrium, and you've got a pretty decent technical setup here. Here's the 92.74 swing point. You can see 5 straight weekly price gains. It pulls back last week, and a little quick shakeout. Usually all you need is a week, at least a week, but as long as it's a week, it's pretty good. So keeping an eye on Agrium here for a breakout over 92.74. The fertilizer stocks are acting well as a group. Fundamentals are a little bit iffy. It's not really, you don't see the explosive earnings and sales growth and the bright growth prospects that I normally like to see. But technically, they look pretty good. Checking in on Monsanto as we head into the second break here. It's outperforming again. Big day for Monsanto, up 2.25% to 85.75. Another ag stock acting quite well here. Still within buying range, in my opinion, is Monsanto. All right, folks. Ken Shreve, TFNN. You're listening to Breakout Investing. We will be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report, with over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar. The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. We've got almost 25 minutes left to go in Monday's session, and to take a quick check on the markets here before we take a phone call. Right now, modest declines. NASDAQ Composite down 9 points, 0.3% to 28.99. The Dow Jones down 39 points, also 0.3% to 12,738, and the S&P 500 only down about 2.5 points, 0.2% to 1354. 877-927-6648. Let's go to Orange County, California. Talk to Garo, who wants to talk about a dollar retailer. Dollar Tree, is it, Garo?
Yes, sir. Thank you for taking my call, sir. Regarding Dollar Tree, I need an entry point, please.
Well, you know, Garo, I'm not a huge fan of the dollar retailers here. Dollar Tree is still hanging on here. It has been coming down. It's finding support at its 50-day moving average, but it's not clear to me that it's going to be able to do that. So that's the problem I have with it now. If my thoughts will change if heavy volume buying comes into the stock. I haven't seen any of it over the past 2 to 3 weeks. In fact, what I'm seeing is more kind of mild signs of distribution in the stock. In other words, you've got these higher volume declines, you've got volume expanding to the downside, and when it's rallying, it's doing it in mostly light volume. So this type of price action has been going on since about June 20th, and beyond. So if you want to take a position here, hoping that it's going to find support at the 50-day moving average. Its 50-day line is at $52 a share, basically. Right now, it's trading at $52.53. So you'd want to keep a tight stop on this, probably 2, 3, 4% below your purchase price. But I have to say, I can't give it a ringing endorsement here.
Okay, how about if it crosses $54? Let's say $54.20, $54.40.
I would wait even a little further than that. I would wait to probably $54.50, maybe even the $55 price level. But if it does that and it starts to rally, I'm not real keen on these low volume rallies. Okay, you want to start to see some volume expansion if it indeed does find support here. If it does firm up at its 50-day moving average, I think a new uptrend will be intact if it ultimately gets over this, I call it 54.75, 55. If that happens, basically I just wait for the stock to prove itself a little more. It looks vulnerable right now at around 52.50 a share.
Yes, sir. Yes, sir. Thank you very much. Thank you.
Okay, Garo, thanks for the call. Always appreciate it.
Thanks.
Yeah, DLTR, Dollar General, DG, Family Dollar, FDO. Not really fishing in that pond right now. You put all of these stocks back on weekly charts, and you just see monster performance for several years, two years or so. These stocks have been leading the market. Fundamentals still look pretty good here, especially if we're economic growth is going to soften a little bit in the second half. These dollar retailers should continue to do pretty well, but DLTR looks vulnerable here. Let's check in on Dollar General while we're at it. Much different looking chart here, but it's still extended, so I can't get excited about buying Dollar General up here because it broke out over $49 a share, still holding well above its 50-day moving average. But this is not at a buy point right now. And FDO, Family Dollar Stores, looks almost as vulnerable as DLTR because it's trying to hold on at its 50-day moving average here, just not seeing much in the way of meaningful buying demand. So that is my take on the dollar retailers. Not a big fan right now. Best in breed clearly at this point would be Dollar General DG, but it's extended. Too late to buy. Checking in on some economic data earlier today, retail sales for June declined 0.5%. That was pretty bad data. The estimate was for 0.2% growth, excluding autos. Retail sales fell 0.4%. That was also well below expectations. So, not too bad a performance for the markets so far today, despite this weaker than expected retail sales data. The data was the first time monthly retail sales had declined for 3 straight months. April, May, and June, we saw declining retail sales. First time that's happened since late 2008 when the economy was in the middle of recession. Empire Manufacturing, this is a look at manufacturing activity in the New York area. Some good news here. The index came in at 7.4. That was almost double expectations and nicely above June's reading of 2.3. So good reading from the Empire Manufacturing Index earlier today. Not super busy in terms of economic data for the rest of the week, but tomorrow we've got the Consumer Price Index. Last week Producer price index came out. No big surprises there. Inflation, at least by the way the Fed measures it, still relatively tame. On Wednesday, housing starts, building permit data for June. We also get a look at the Fed Beige Book. And Thursday, weekly jobless claims, existing home sales for June, and the Philadelphia Fed. So we'll see if that Philly Fed reading on Thursday can mirror what the Empire Manufacturing Index showed earlier today. Taking a look at some other names that are working here, names that I think still have potential that I am watching closely. The Fresh Market, TFM. Fresh Market gets a lot of talk on our show. I like the company's growth prospects. It is trading near a session low right now, up 6 cents, 0.1% to 55.53. This is a technical setup that you can look at two ways. It's either a base on base pattern. Here was the first base right here, big gap up when the company reported earnings. Didn't really get very far until it settled into a new base that it's currently working on. But I would probably look at this structure as a base on base pattern. Right now, a cup with handle pattern forming. Again, another pretty decent technical setup here. So I'll keep an eye on the Fresh Market for a heavy volume breakout over $58 a share. Its high set here in late May, early June was 59. But if you get a heavy volume move over 58, this one I think would be buyable as well. I think that fund managers are still in the early stages of discovering this company's growth story. They're just now coming into California. I think it was IBD had an article on this company within the past few weeks. They've begun construction on 3 stores in California, one in Santa Barbara, one in Palo Alto, where Stanford is located, and another in Roseville. Expects to open its first store in the state later this year. Or early 2013. Let's take a look at another stock. I think it was might have been Joe in Boston who mentioned this last week. United Therapeutics, and at the time it was looking pretty good, forming what looks to be a little handle area here, and getting good outperformance today from United Therapeutics. This is a profitable biotech company, up 1.2% today to 52.02. Watching this one for a breakout over 52.68. So a lot of growth stocks out there that are sitting just underneath swing points. Can't give up on them at all. Market is not great. It's not terrible either. So want to keep an eye on some of these stocks showing relative price strength. United Therapeutics not far from a potential breakout over 52.68. Last month in June, the company's board authorized the repurchase of up to an additional 100 million of UTHR stock. So interesting potential buy candidate here, United Therapeutics. And Dunkin' Brands. This is a stock that I've done well with in the past, and like I've said on my show, anytime I remove a stock, I sell a stock from my model portfolio, it doesn't mean that I won't revisit it again in the future. And do like the way Dunkin' Brands continues to trade. Recently found pretty good support at its 50-day moving average. Looks like we're kind of bleeding into the close here a little bit with the major averages, but Dunkin' Brands off its high of 36.11, now trading at 35.38, still up 1.9%, trading right in the middle part of its range today. But Dunkin' Brands looking pretty strong here. Another company, they've got thousands of Dunkin' Donuts restaurants and Baskin-Robbins locations, but still a company that just does not have a presence in California. So they're arguably still in the early stages of expansion as well. And a company that has shown that they can manage debt pretty well as they expand. So keeping an eye on Dunkin' Donuts here. I think this one still has the potential to be a big leader here. Resistance at 37.02. Would like to see it prove itself a little more, but another growth name acting pretty well in this market. Another reminder, folks, some stocks are working out there, but you don't want to chase them. Amgen, perfect example here. Amgen had a recent breakout over $72 $72 a share, thereabouts. It's now trading up at 77.26, up 0.4%. A lot of people pounding the table on a company like this, and its breakout has been powerful, and it is a strong stock. There's no question about it. Fundamentals pretty darn good as well, but you don't want to chase stocks that are just moving higher and higher and higher. It's tempting to chase performance, but I wouldn't touch Amgen with a 10-foot pole up here. Very extended after a recent breakout. I have written down here 72. It looks like you had a recent breakout over 73, and then another breakout over 71 thereabouts. Either way, it's very, very extended. So be careful of chasing this one. And then there's another stock here that is popping up in my screens. Excellent growth. It's a company that services residential mortgage loans in the U.S. Excellent earnings and sales growth. NationStar Mortgage Holdings, another recent new issue. It's down 41 cents today, 1.7% to $24.37. Another stock that is extended here. A lot of people will point to outstanding fundamentals, outstanding growth prospects, well-managed company, new issue, lot of potential, but I would be very careful about chasing NationStar Mortgage Holdings up here. That's ticker NSM. Recent breakout over $20 a share, but at $24.37, it is very extended. So wait for this one to take a breather. Wait for it to pull back to a support level. Wait for renewed signs of institutional buying. If you see it, make sure that it's consolidated gains adequately before considering a buy here. A lot of NASDAQ 100 earnings coming up this week. I wanted to take a look at a few of them. Intel reports tomorrow. We might not see a good quarter here. I haven't heard too many people that are expecting good news from Intel. It did keep pace with the market on Friday, but it is down 0.5% today to 25.11. Intel again out with earnings tomorrow. Profit is expected to fall 4% from a year ago to 52 cents a share. Sales up 4% to $13.6 billion. Also on Tuesday, we'll see what Yahoo has to say. Yahoo will be out with earnings tomorrow. Another sluggish performer here. A lot of uncertainty about where future growth is going to come from. Still looking to name a permanent CEO at Yahoo, but earnings, bottom line growth expected to be pretty decent, up 28% to 23 cents a share. Not much top line growth happening at Yahoo these days. Sales only expected to be up 2% from a year ago to $1.1 billion. So technically, recent price and volume trends in the stock really aren't telling me anything that the stock wants to head higher anytime soon, but we'll listen to what Yahoo has to say tomorrow. And then on Wednesday, another stock really I thought had great potential. Thought it had great potential to be a leader. You had a nice breakout in June, and then boy, the breakout just fell over. On its face. Intel underperforming broadly today, down 3.5%. I mean, this is a very strange price action. There's a little bit of volume behind the move today, but down 3.5% to 38.56, below its 50-day moving average, trading near its session low. Volume today is going to be coming in much higher than what it saw Friday. So eBay acting a little strange ahead of earnings on Wednesday. Technically not looking good at all. Earnings up 15% from a year ago to 55 cents a share. Sales expected to rise 22% to $3.4 billion. And finally, in the NASDAQ 100, also on Wednesday, we'll take a look at Qualcomm. Huge company here, technically an awful stock. It's just it can't get out of its own way. It's a broken stock. Value investors are going to try to come in here and make some money. Who knows? Maybe a lot of bad news has been priced in here. Qualcomm, a big company. Earnings expected to be up 18% to 86 cents a share. Top line growth pretty impressive in the second quarter. It's expected to rise 29% from a year ago to $4.7 billion. And I'll tell you, a large cap name like Qualcomm that can grow the top line by 29%, that's pretty impressive, but technically it's a broken stock. Not a lot of institutional support at this point. All right, folks, headed into the final break. We will be back in about 3 to 4 minutes. Talk about some other names on my radar here, as well as other earnings reports due this week. We'll do that when we come back.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN, now 5 days a week on the network. Right now we're bleeding a little bit into the close here. NASDAQ Composite, but not too bad, down 13 points, almost 0.5% to 28.95. Right now, NASDAQ volume is tracking higher than what we saw Friday, and if we do end up with a percentage decline of, say, 0.4%, 0.5%, something like that, it would be the Nasdaq's third higher volume decline in the past 5 trading sessions. So we've got these yellow flags in the market that are being raised seemingly more often than not, and that is a big reason why I'm playing more defense than offense right now with the Ultimate Growth Stocks model portfolio. This is a risky market. I think overall the risk outweighs the reward. It doesn't mean that I'm willing to take a chance here and there, nibble at a long here, nibble at a long there, see if it works. And again, I did that today, and I'm in positive territory with a new initiation today. So I'll nibble selectively. I haven't given up on this uptrend, but there are several yellow flags out there that are worth paying attention to. So looks like we could get more distribution in the Nasdaq composite today, and checking in on the S&P 500 as we head into the close. It is not too bad as well, down 4 points, almost 4.5 points, 0.3% to 1348. So mostly mild selling pressure. Was thinking we could get a close near highs today, maybe even close positive, but sellers are still out there. They're not out there in spades today, but again, it looks like we could see another mild distribution day on the Nasdaq composite today. Don't forget several IPOs, I think 5 in total, a couple of high-profile companies set to come public sometime this week. They announced terms last week. I don't have charts for them for Tiger TV, but keep an eye out for Kayak Software. That's going to trade under the symbol KYAK. KYAK. They operate an online platform that allows consumers to compare flight, hotel, and travel info. Companies that are in businesses similar to this continue to do pretty well. Let's take a look at Expedia. Although Expedia is finally looking a little vulnerable here, fell below its 50-day moving average recently. Looks like it's ready to consolidate gains for a while here. Right now, stock is down 1% to 45.21, still underneath its 50-day moving average at 45.44. Let's also take a look at TripAdvisor, which was spun off from Expedia late last year. TripAdvisor still holding up nicely in this market. I don't think it's buyable right here, even though it is finding support at its 50-day moving average. Would really like to see this one form a good base, consolidate gains a little while longer. But TripAdvisor today up 0.5% to 46.08. So anyway, that was sort of a segue. Going back to Kayak Software, KYAK. Again, their online platform allows consumers to compare flight, hotel, and travel info. They're based in Connecticut. The company plans to raise $82 million by offering 3.5 million shares at a proposed price range of 22 to 25. So keep an eye out for that IPO this week. And also Palo Alto Networks, PANW. They provide firewall products to enterprise customers. They plan to raise $220 million by offering 6.2 million shares at a price range of 34 to 37. So we'll see how those IPOs fare this week. Let's also, as we running out of time here, let's check in on shares of Zillow. Zillow continues to act nicely here. Good, strong breakout for the stock last week, Thursday. Volume a little bit disappointing, but holding gains nicely today. Only down 11 cents to 42, but good, strong breakout for Zillow over 40 last week. Still not seeing meaningful signs of accumulation here, but high-quality name that's worth monitoring here. Coming up next, the Tom O'Brien Show from 4 to 6 Eastern. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great day.
Great Basin Gold.